Good afternoon, everybody. I'm Stuart McAlpine from Stephenson, Harwood. Great to be at Capital Link. Thank you very much to Nicholas and the team for having us here. Always a great pleasure. If it was Martin's job to get you in the room after lunch, I suppose it's our job, guys, to keep you all in the room. So let's see how well we do. But I'd like to first of all introduce my panelists. So nearest to me is Nick Gleeson, CFO of ADNOC LNS. Nick is ex-group CFO of BW Group and is now ADNOC LNS. I think next to him is Nils Aden, who's the MD of Harren Group, a diversified shipping company based in Hamburg, about which you'll hear more in a moment. Next to him is Mads Peter Zacho, who is the CEO of Navigator Gas, which is involved in the transportation of petrochemical gases and related products, and which also has a diversified business model, which again we'll hear about. And then last but not least, Piyush Sharma, Group Director of Corporate Strategy at NSB Group. So we've got two CEOs, a CFO, and a Corporate Strategy Director. So hopefully we're going to have a good discussion. So the topic, it's not a terribly sexy name, multi-sector corporate strategies, but I think it's true to say that this industry of ours is quite sector specific. Some might say sector obsessed, and I think that applies maybe in the private world of shipping, but it applies in particular, I think, in the public markets, and in particular in the equity capital markets. And what you have here are representatives of companies who have maybe ploughed a multi-sector furrow, and they are, so they come at the industry, the ship owning and operating industry, from maybe a different perspective. And so I think the idea of what I'd like to do in the next 35 to 40 minutes or so is really just to explore their strategic objectives and how those play out as we go through these different market swings. So maybe I could start, Nick, with you, if I may, and I really want each of you to do this. Is really to give us a sense of where your current strategic focus is, and I think a quick overview on the different sectors that you're in would be brilliant. Thank you.
Absolutely, thanks very much. So we're a multi-sector business. We're predominantly integrated logistics. Around 65% of our revenues and earnings at the moment come from integrated logistics activities, oil field services, including some onshore services, supply bases, and onshore logistics handling and warehousing. And around 1/3 comes from shipping. But in the last several weeks, we've announced $5.3 billion of investments into shipping, going into long-term contracts, as well as the acquisition of Navigator, which is subject to regulatory clearances. So within a couple of years, we look quite different. We're much more shipping-oriented than we have been historically. Now, we do have plans to continue to grow the integrated logistics side of the business, but it does beg a question for investors into our business. What am I investing in? Am I investing into an integrated logistics business? Have I invested into an integrated logistics business that's becoming a shipping business? How is it going to look in 5-7 years' time? And how do I manage my allocation of capital based on what I think the business is going to do? So we spend a lot of time thinking about that. There's a couple of reasons that we think that multi-sector investment is interesting to us. One of the major reasons is we grew the business from the integrated logistics platform, from operating offshore support vessels, multi-purpose support vessels, in the energy fields in the UAE. And we learnt a lot as a business in that process that enabled us to grow into other areas. Ultimately, ADNOC required tankers to move product internationally. They required dry bulkers, and they required LNG carriers. And so we made those investments, and that core client was an anchor point to our growth. And then as we grew, we realized that having those capabilities, having the assets, having the personnel allowed us to earn revenues and to earn income from other customers, and that's how we've grown globally, leveraging up or bootstrapping from using ADNOC as a base in both the integrated logistics and the international shipping. The benefit that we tried to derive is one of counter-cyclicality. You've got to be careful. If the oil price drops significantly and for a sustained period of time, that's not going to be beneficial for any of our businesses in the portfolio. But there are elements of short-term counter-cyclicality, and there are elements of what we can do in our investment to make us more resilient in periods of short downturn, or, for example, if we see a periodic short downturn in the integrated logistics market, the fact that we have a very large number of 15, 20-year contracts in international energy transportation helps us to weather that storm.
Thank you, thank you. And just before we move on, and, in terms of your investor base, and of course, ADNOC is a big name. You listed on the Abu Dhabi Stock Exchange, I think, in early June last year. But in terms of the sale of the business to the investors, can you talk about that? I mean, is it challenging because there is complexity, I guess, in the business that you have? So how did that sort of play out, Nick?
It was when we started the IPO process, definitely we were concerned about complexity and how we explain the story of the business to our investors, how we get people to understand such a complex combination of different assets and different contracts in our portfolio, to understand how that's going to securely deliver value over time. And a part of that we could explain up front. We had a very large number of investor meetings. If you look at the ADNOC listings that happened over the last 2 years, I think we probably had close to triple the average number of investor engagements during our pre-IPO process, just to make sure that we brought people across the table with that understanding. And frankly, from talking to analysts, I think that the first year of our operations, performance and explanation was really important to securing a deeper understanding of what exactly it is that we do. Most analysts have said to me that it did take multiple releases of results to completely get their head around our portfolio of business and why it all works together.
Thanks, Nick. Maybe I could just stick with the public sector for the minute. So, Maz, if I could come to you, maybe to talk a little bit about your strategic focus, and maybe also address this, this sort of investor question. I recognise that Navigator Gas and ADNOC are two very different businesses, but if you could hit the same question, that would be great.
Yeah, sure. Navigator Gas is a gas tanker owner and operator. So we transport commodities like LPG, like petrochemicals, like ammonia today. But we also have very large opportunities in the clean ammonia market that is emerging. We also have great opportunities in the CO2 transportation market that is also yet to be materializing, but carries incredible potential going forward. So we have a strong core business, and we have some amazing opportunities in front of us that require the gas tanker expertise that we have in-house today. They're all cooled and compressed gases and require high safety standards, and that's what we have today. We also own port infrastructure, so we have a 50-50 joint venture with Enterprise in the US. It's the world's largest ethylene export terminal, and we're expanding it right now. And that helps us in growing our sea transportation, our gas tanker operations, and it also gives us access to stable, predictable cash flow that really combines well with our shipping revenue at the same time. So we see some very clear financial synergies between owning both infrastructure and shipping, and we also see some commercial opportunities here that benefit our customers and ultimately drive more revenue through our business.
Mats, thanks. And in terms of the the investor issue, when you made that investment in Morgan's Point, which I think was in 2020, right?
Yeah.
When you did that, I mean, how did your investors react to that? Was it completely supported?
Yeah, I think they saw the benefit here. We have been the largest shipping company in terms of transporting ethylene. Most of our ships are ethylene capable, and that's an exciting niche, but it is a niche. So there's a really good, you could say, commercial synergy between owning the infrastructure and the ships. So that means that we can predict when we're going to load what with which customer, and that means that we'll have our ships on time, well maintained, and ready for taking the cargo here. So I think it was pretty straightforward to see that connection between owning the board, part of the board, and also the ship.
So relatively straightforward sell.
Yeah, and we're looking to do the same also now in ammonia, where we're looking to invest into ammonia production or harbor logistics to complement our ammonia transportation business.
Lovely. So, just coming onto the private ship owner side, Nils, why don't you, address this, this topic of strategic focus. Your company has a, very interesting history in terms of the different sectors of the industry that it's been involved with, and I know that you've got, a particular focus now. So, please, if you could make some comments, that'd be great.
Yeah, thank you. I think we are a company founded in Bremen 35 years ago, and I wasn't really aware that we are so similar to ADNOC in some ways. On the way on this journey of those 35 years, we had now also periods where it wasn't so easy to explain really what we do, because we've always been very diversified. But the thing that has always been important for our company was to be very, very close to the end consumer of our services. So we, over a period of time, we even had our own container line where we ran our container ships. Now, what we have done over the years significantly is adjusting to changes in the market and to refocus, and that's where we are now as well. So I think today we're actually a little bit easier to be explained. We are a ship owner, we are operator, and we are a ship manager. And we do that with a more specific focus on vessel types. So today we primarily run heavy lift vessels under the brand SAL. We run multi-purpose ships, break bulk services primarily in the Americas under the brand Intermarine. And we manage ships under the brand Harren Ship Management. Now with this structure we are much clearer today because we focus very much on the heavy lift and break bulk business. And we also add bulk carriers, smaller bulk carriers, flexible bulk carriers to that, so that to the end consumers where we do the commercial management, where we have all the cargo fixed just by ourselves and not via time charters, we are very close to the actual users of our services, to the end consumers. And that helps a lot to shape our focus. And that is also why we added a freight forwarding company to the mix, which is focusing on project cargos as well. So you could say today that the Harren Group is very much focusing on the dry sectors all the way from very heavy lift to break bulk and minor bulks. At the same time, we keep the widespread coverage of vessel types all the way to tankers and actually even jackups in the offshore wind field in terms of ship management, and we own most of the assets plus third-party owned ships that we manage. Now, to summarize this structure and the value of this structure is that we have the broad experience of the different sectors, and at the same time, in all of the sectors we're in, we are very, very deep from owning, managing, and actually also commercially operating. So we know very well what the ships are there for, which for us is not to time charter them out, but actually to use them for the actual cargo trades. And we apply this very holistic knowledge into our services that we also offer all the way to third-party ship management services. So that's probably a kind of summary of the variety that we've been through over the years.
Thank you very much. So Piyush, last but definitely not least, I'd like you, if you would, to talk a little bit about NSB Group. I know you do strategy there, and so in terms of multiple sector investing and participation, I guess you've got a perspective to share, so it would be good to hear that.
Thank you, Stuart. Thank you very much. Good afternoon, everybody. We are a bit of a contrast compared to my esteemed panelists here. We are small but not insignificant part of the maritime value chain. We are a maritime services provider, established 1982. We do traditional ship management, crew management, new building and other services. But we are also sort of pioneers of sorts. We started doing gas tankers in Germany way early in the 90s. We pioneered a widening concept of ships in the 2000s things. And actually, I'm very pleased to see there were two important messages today, one from the chairperson of ABS and one from Martin about enhancing your skill set. So for us, strategic focus is very clearly defined: first people, then technology, and then assets. So that's what our strategic focus is for now.
And can you talk a little bit about your technology, your technology company, your
on the technology side, you see NSB Group as the shipping arm, but we also have a small company incubated a couple of years ago as 0 to 1 Invest, where we look to invest in maritime startups, and we have also done incubation of our own startups with entrepreneurs from our company who had bright ideas. And we have been tying up with universities, various across Europe, to get the talent into the company. And this is what has been our focus, to make sure that we can be the differentiator in the ship management sector through the use of technology that is available today. In fact, I was talking to our teams and I learned, when you look at the latest McKinsey reports on AI, you have the makers, you have the takers, and you have the shapers. So for us, we consider ourselves as one of the shapers who have the people with the right talent, use the existing technology, create tools which make us a differentiator.
Thanks, Piyush. I'd just like to take a moment or two to ask each of you to look ahead. You are where you are now with your different areas of focus and your the participation that you have in different areas of the industry. So, in terms of Navigator Gas, Mads, maybe you could do it. What do you think? Where's the next 5 or 10 years going to take Navigator Gas? Do you think? And how differentiated will you be sectorally in 10 years' time compared to where you are today? Sorry,
yeah, 10 years is a long time. The good position we're in right now, we have high utilization, high demand for our vessels, and the supply is tight. So our margins and our utilization is strong today. And we see that continuing over, you could say, at least the next 3 years, which is really the visibility we have. On the demand side, we expect that the demand for our shipping services are going to grow between 5 and 10% per annum. And at the same time, we have a supply situation where very few ships are going to hit the water from the new building book because there is very little in the handysize sector. So that means that our utilization is only going to be tighter, and that's a good outlook. We've been deleveraging quite a bit over the past couple of years, so we have financial strength today that allows us to grow the business and at the same time be shareholder friendly in doing share buybacks and paying out dividends. So we can do a little bit of both. We have a lot of investment opportunities, both, as I mentioned earlier, in the CO2 space, in the clean ammonia space, and also in our core business. We are the largest player in the ethylene transport business, so we are planning also to continue investing into both our fleet and also the infrastructure. We'll expand our terminal in Morgan's Point. It'll open the expansion mid-December, and that'll add a lot of additional demand for our vessels just from that expansion itself. So growing our core business and at the same time also monetizing those opportunities we see in the energy transition from CO2 transportation, clean ammonia transportation, both on the infrastructure side and on the vessel side. So I think we want to have the cake and eat it too.
Right. And in terms of new investments, I know that you announced quite recently a two-ship new building.
2+2, yeah. So ethylene carriers, mid-size, really to complement this expansion we're doing. We are adding 55% to the existing terminal capacity. Right. And given the tight supply-demand situation right now, our customers are rightfully asking us, so, which ships are going to transport these additional volumes? And now we're building the ships to do that. So we want to be sure that our customers continue to see an undisrupted floating pipeline of ethylene coming out of North America to the end user.
Thanks, Nils. And just sort of continuing this forward-looking theme, and Nick, in your opening remarks, you touched upon the Navigate deal, you touched upon the new building transaction. So maybe can you put those into a bit of a strategic context as well?
Yeah, exactly. So I think for us, we're doing two things at the same time. And one of those is starting to increasingly segment our businesses and how they're run. And what I mean by that is, for example, in the finance team, I'm putting people in to become essentially financial controllers over these individual business segments, which are becoming rapidly much larger than they were even just a year ago. But at the same time, we're making sure that we keep the business integrated where it makes great sense to be integrated. So areas such as HSE, digital, sharing technical management capabilities across the shipping space and across the integrated logistics space. So as we grow going forward, I would expect that increasingly we'll see these, what at the moment are departments or operational segments of the business will actually become businesses in their own right with their own management teams. I'm not saying that will happen tomorrow, but as we move down the track, it will also make sense, for example, to use different sources of capital for different elements of the business. We have these long-term yield play assets, particularly in the gas part of the business. We have significant spot play fleet. We'll have commercial pooling increasingly in our platform. In integrated logistics, we have volume-based contracts as well as more traditional daily charter rate contracts. And each of their businesses has their own nuance in terms of effective management and effective strategy deployment. So it would make sense to start to segment those, to build specialised teams into each of those, but at the same time make sure that we're operating efficiently off a common platform and again benefiting from counter-cyclicality, proper balance between long-term exposure and spot exposure, and making sure that we have fundamental common principles across things like HSE in the business.
Fantastic, fantastic. And in terms of, as you mentioned again in your opening remarks, I think when ADNOC LNS listed last year, you talked about a capital investment program in the region of 4 to 5 billion. Now I know it's over 5 billion. I think part of that has been dispersed, but there's more to come. Are we going to see a sort of a shift into another sector? I mean, what do you think in terms of?
It's a really good question. I won't say too much right now, but essentially, when we listed, we equitized $2 billion of pre-existing debt before we did the listing, and that was a strong signal to the market that we have a lot of demand for our services that we expected to invest to satisfy. We've been cautious since listing, and I certainly intend that we continue to do that going forward, that we only signal to the market opportunities which we think are very realistic and likely to proceed. So that $4 to $5 billion was what we had on the table at the time, very likely. That's been more than delivered. In the last several weeks, we've delivered $5.3 billion additional, most of which was on top of what we were talking about at the time of the IPO, and we will do much more. I think, areas of growth for us going forward, for integrated logistics, we're very focused in the Gulf countries at the moment, but we have capabilities that we think are very meaningful to other regions around the world. They're probably areas that we'd need to work with partners. So we're looking at the right opportunity to find the right partners, the right asset classes to deliver the same sorts of solutions that we've done so successfully in the UAE. The same on the shipping side. If you look at Navigator as a platform, there's many things that business is doing extremely well, and there's many areas that business could be expanded to address other areas of international energy shipping. So yes, we see a lot of continued growth and continued diversification.
Right. Just as an aside before I come, Nils, to you, I mean, I saw from Martin's presentation that, Super Cycle 3, in the little bubble, he was talking about integrated logistics, and all your companies, in fact, the three asset-owning companies here anyway, all your websites talk about integrated logistics. So it's clearly a central focus of what you're doing. So Nils, just coming back to you and just looking forward. I know that you've got a ship management offering. You mentioned it again in your opening remarks. You've got a big investment on the heavy lift side in terms of new buildings. But can you look a bit further beyond that? Where do you think in the context of the industry today you would want to take the company?
Well, it's not easy to predict where we will be in 10 years because the last 10 years have taught us that is difficult to predict. But what we do at the moment, and those new buildings are a nice example of that, we are kind of very much listening to what our actual clients are telling us and what we see and try to foresee in terms of future needs of our ships. And these new buildings, for example, we've kind of reverse engineered from all the feedbacks we got from the heavy lift business and implemented all of that feedback and knowledge and expectation and outlook into the design of those ships, which includes all of the items from the actual users, but of course also the digitalization and especially decarbonization aspects. They are dual fuel methanol ships. And what we try to do at the moment is to kind of listen as good as we can to implement all of that into what we do today to be ready for what's coming. We believe that the flexibility that we actually have as a company is really key, and there's also been pointed out by Martin Stoffert, is that this is really important, especially as a private company, as a medium-sized company. You need to be quite agile all the time to adapt. Now, with this approach to the heavy lift vessels, that's the same approach we apply when we, as you mentioned, the ship management side, where we also kind of adapt very much to what the client actually wants. And by adapting all that own experience from being an owner yourself, we know the good and the bad times as an owner, with owning our asset strategies changing over time, sometimes rapidly, where we see the demand and the needs, the requirements from the end consumers, and to compile all of that into a very dedicated service, which then again fits into the needs of an owner, and be it our own or a third-party owner. That's our strategy, where we believe we will be very well equipped for the next 10 years to develop. But how it will look like in 10 years, I cannot tell. But I think the approach is very suitable to how we do our business.
Thanks, Nils. Piyush, I'd like to come to you next and really ask you to talk a little bit about the focus that I know NSB Group has had on digitalization. You, I think, touched upon it very briefly, but maybe you can develop that a bit.
Yeah, thank you, Stuart. And in fact, we embrace Martin's mantra very much to the core. We dropped the idea of buying a super bike. We spend money on the skills. And in fact, as you asked, Stuart, 5-10 years from now, 5 years ago, there was no mention of AI. Today, it's very much talk. There are new buzzwords happening. Digitalization was not existing. It is now very much there in every organization. So for us, what we are trying to do is, we are, of course, looking to grow our core business, both the organic and inorganic, in the usual ways. But also on the technology side, we try to embrace the change, make sure we are capable of handling the change rather than be reactive to that. So every time, like we have now new technologies coming up, new situations coming up, we are already putting people to say, okay, how can you do this? It's a blank canvas. Come up with an idea how to make this process more efficient for us, and see what all tools can be used. So for us, the idea is 5-10 years, there may be a complete change, but we should be there, not scared that we have been many years behind, so to cope up would be very difficult. So for us, it is embrace the change and look forward what comes next, and then go on further on.
Thanks, Piyush. And again, just a sort of a slight, maybe slight segue into a discussion on value chain. I think a lot of what you guys focus on is how to extend that value chain, in the best interests of your organizations. And Mads, maybe you could talk a little bit about that, and about Navigator Gas's focus on that, and how you make it a reality.
Yeah, I think a good example for it is the Morgan's Point ethylene export terminal. Here we provide the shipping services to take the product from the terminal to the customers, but at the same time also own part of the terminal. And that means that every single month we have planning meetings together with the terminal people, understanding what cargo is moving, by whom, in what quantities. And that ensures that we can have our ships in the right place at the right time. We know if not a lot of cargo is moving, there's no point in sending the ships ready for Houston. But if demand is there, we need to make sure. And we know that ahead of all the other shipping companies, which is a clear strength for us in the way we operate it. It means that we can do our planning better, so we can ensure that reliability and efficiency is right there. So yeah, it gives us this commercial synergy that makes our shipping business more profitable, and at the same time give us a stable, predictable cash flow from the terminal. So I think also it makes us more attractive towards our customers, because they know that we have good overview of the whole value chain.
Right. And one thing I'm interested in and wouldn't mind exploring with you is that, when you made that investment in Morgan's Point, clearly there were challenges of getting the deal over the line and making sure you felt that you'd made the right investment. But I assume that brought about the need for some organizational change, with a significant, it's a 50-50 joint venture with Enterprise, isn't it? So yes. Presumably that brings about the need for the organization to, in a sense, change in order to make sure that the value from that investment is maximized.
Yeah, and that's been done in partnership with Enterprise, that we worked with them for 6 years now, and developed the skills that were needed to get that collaboration up and running, so that we can now replicate it and do the same for ammonia for the future. So it means that we, by investing into a bigger part of the value chain, that we can develop and be a proper sparring partner for the customers in that.
And I'd like really, Nick, to come to you with a similar question, really, because ADNOC's been through a lot of change, and does that, that then changes the internal culture and the way in which maybe the company interacts with its people and to third parties. How's that process been from your perspective?
Yeah, so the process, ADNOC has grown massively over the last several years as our business has grown massively inside ADNOC. And what you see as a result of that is this deployment of further empowerment to the individual organizations, the listing of a number of the subsidiaries to begin to operate separately, the listings beginning with a relatively small sell down by the parent. We've already seen now follow-on issuances coming down the line, and I think you can kind of gauge from that where that ADNOC level strategy might be, although it's not for me to talk about the ADNOC Group's strategy by itself. I think what that does for organizations, there's a lot of pressure with very high growth, and there's a lot of risk of getting things wrong. But it also makes you extremely focused. And if I look at how our boards, our committees work, not just our board subcommittees, but also our investment decision committees and so on, I think they're very heavily geared to the fact that, on one hand, we have a mandate to grow the business at an extremely rapid rate, and that's to meet the requirements of the UAE and to make sure that we optimize the benefit to the UAE of the work that's being done there in energy production, but at the same time that we do all of that without taking disproportionate risk and without losing focus on important things like health and safety, like making sure that we maintain asset integrity over the whole life cycle of assets, and that we operate profitably in the best interests of our shareholders as listed businesses. If just one of the listed businesses does something wrong and makes a serious mistake, that will have an incredible impact on the overall value of the ADNOC system. So yes, there's a lot of change, and I think it's extremely focusing.
Yeah, and in terms of the listing, and you probably can't say very much about this, but I'll ask the question anyway. I mean, would you see a secondary listing coming down the pipe, or what can you say?
Well, what I can say is this: it's a question that's been asked in almost every single investor discussion that we've had since 6 months post-listing. So we're a very young company. We listed as a listed company. That is, we listed in June of last year. So, really not that much water under the bridge post-listing, but because we've grown so quickly and because there is this diversification of asset base and of contract style and so on, there is the potential for further sublisting down the track. I think it's pretty early for us to talk about that right now. If you look at the M&A that we're taking on, that's already going to be enough work for the management team in the company to absorb and really generate the full value out of those acquisitions that we've made and that we're making. But it is interesting to think about 3-5 years down the track, when you look at how big we anticipate the business to be, that there could be multiple listed and unlisted vehicles under different corporate financial structures within the system.
Thank you very much indeed, Nick. We just got slightly more than 5 minutes to go, so I thought that maybe an interesting way to wrap this up would just be to refer back again to Martin's brilliant presentation, and just get each of you to give us your thoughts in the context of your businesses about his 1946, sorry, I'm showing my age now, 2036, 2046 peaks, and where you see that. So why don't we start, Piyush, with you and how you see the next, I guess, 10, 15, 20 years.
The next 10, 15, 20 years are still going to be full of change. That's one constant in shipping, although as Martin pointed out, there have been variations, but one thing definitely remains constant is there will be change, there will be new regulations, there will be adaptations, and there will be change in technology. So for us, that is the idea. How do we keep pace with this as an organization? Keep it agile, keep it very innovative. We actually, thanks to that, have been winning awards in Germany as small and medium scale enterprises. the last 4 years, 3 times, and we hope to continue that because the next 5-10 years is anybody's guess what is coming next in terms of technology, how it changes the shipping cycles, how the various geopolitical situations change. So we are open to see what is coming next.
Thank you. Nils?
If we look at our key cargoes, which is the heavy lift project cargoes, we are very, very much used to be super flexible. We have to, because every cargo looks very different. Every cargo has a lead time of several months, with the engineering department making the math of kind of how can we actually put it on the ship without the ship being capsizing and stuff like that. So we have a mentality to adapt very, very much to what we are asked to do. And this mentality will go on. This is the same mentality that went into the new buildings I just mentioned. They are kind of built specifically for the wind industry, but no one can guarantee us that the wind industry will be there for the next 25, 30 years as our main cargo. So these ships are also built to accommodate any flexibility that we can foresee anywhere in the next 10, 15 years. And again, it's the same approach we also apply on the ship management side, where it's really about adapting to the needs, where we firmly believe that ship management is not a commodity, but should be very much focused on the owner's requirements, because it's always about an asset, which is kind of a several million asset, and it requires a specific level of care and not a off-the-shelf product. So with this very kind of much focus on the actual requirements, that's the agility that we will apply going forward, and that's, I would say, our core philosophy to adapt to change.
Thank you, that's great. Thank you. Mads?
Yeah, we are building new ships and expanding our terminal in the existing core business, but at the same time over summer you may also have seen that we have made announcements around investments into infrastructure in clean ammonia and also memoranda of understanding on CO2. So what we're doing here is that we are building optionality. We are preparing the company for what's going to happen, not next year or in 3 years' time, but what comes in 5 years' time or later. So we want to be sure that we have some stepping stones out there. So the energy transition, we can have a long discussion around whether that's going to happen soon or later, but it is going to happen at some point in time, and we want to be sure that we have the right capabilities and the right growth options once it happens. So for us, we are in the gas tanker business, and for sure the gas tanker business is probably one of the shipping areas that are the best exposed to the energy transition and what comes beyond. Yeah. So just making sure that we are there to capitalize once it happens, that's a key strategic focus for us.
Thank you, Mads. And Nick?
So, I think 20 years is a very long period of time and a lot can change. And Mads mentioned the energy transition, and I think it's really interesting to think about what the distribution of energies might be in 20 years' time, and the distribution of geographies from which they're being sourced and where they're being used. A tremendous amount can change in the life cycle of a vessel. And I think we do see a number of owners now think of a vessel life cycle as being shorter than the available life of the steel to carry its cargo as a result of that. So energy transition is going to be really important. I think automation, digitalization, equally important. We have so much going on in terms of, for example, autonomous vessels, autonomous port operations, the use of technology to change the way that we do things, to dramatically improve safety aboard vessels and across the industry as well. I think we'll see significant changes there. If I bring it back a little bit more to the micro cycle, one of the interesting comments that was made to me after Posidonia this year is that we rarely see that many people having brought in so much cash in such a short period of time with big smiles on their faces without that being followed by some sort of downturn in the market. And it's really interesting at the moment. It's probably the lack of availability of ship slots is having some impact on that. We're seeing a little bit more rationality applied to new investment, having seen strength in certain segments. But it's unusual to be in the position that you are today, where you say, looking forward, wow, tankers looks pretty solid for some time to come, bulkers look pretty solid for some time to come. You might see some shift in LNG, LPG still has a degree of tightness around it for some time to come. And rarely can you look 3 or 4 years forward and feel as confident as much of the market feels right now that we won't see overbuild or overcapacity drown the market. Let's hope that that turns out to be the case. But rarely historically has it been the case that we've had so many years of positivity across energy transportation.
Indeed. Thank you very much indeed. We are out of time, so just remains for me to say thank you very much indeed to the four of you. All very fascinating businesses, very, very interesting for me, and I hope for the audience to hear about how these businesses run and the multiple sectors that you're invested in. So thanks very much indeed. Thank you, Nicholas, and that's it. Thank you. Thank you.